YouTube and the Bookmap Discord Trader Lab. Thanks, Dan. How we doing in YouTube? Just had a little technical glitch here. Want to make sure I'm good. Okay, great. Thanks, everybody. Good morning. Welcome to the Traders Lab. I'm your host, Tom B. Appreciate you visiting today. This stream's about integrating Bookmap order flow tools with auction market theory using a volume profile as a chassis in the intraday developing time frame. It's based on structured trades. These are available to everyone at no cost in Trader Lab, as well as the library of webinars, document section, and the Trader Lab community, which is a group of like-minded traders who come together to leverage their collective experience. This is based on the business of trading. I personally believe anybody can learn how to trade. The key to trading is to understand what it actually is, and that it's based on statistical probabilities, not predictability. And I demonstrate this every day in the Trader Lab about the business. And if you're interested in a potential career path and working with serious-minded traders, I'm going to assure you this is not romper room. This is about the business and sustainability. So let's get into it. I have a lot to talk about today. Also, if you find these streams useful, copy the link, forward it over to your friends, your other traders. Most of us walk in the same shoes, go down the same path, and most of us don't understand what this business really is. We tried to bend the business to fit what our beliefs are, and what we believe and what the business is might be quite different. And we all have winning trades, not the issue. I know it's more winning trades. Have you ever thought about that? Everybody has winning trades, and it takes no skill and no understanding to have winning trades. What it does take is understanding the business you're in and then designing a solution for the business, not for randomness. By the way, in Bookmap, and this is available to everyone, the Bruce's pilot program, it's really about edge. Trading is edge, and you need to understand the difference between being right, predicting, and edge. How about that one? And don't forget, you can win 3 months of Global Plus with stocks and futures data, and all you have to do is submit, and this is for the month of October, a screenshot of your trade. Circles, arrows, whatever, a little description. It's just something that looks like this. Submit those, and you can submit as many as you like, and drop it on with the hashtag FreeBlueJacket on X, Instagram, or LinkedIn, and you can be submitted. And not only that, 3 months of Global Plus, you can get the coveted blue jacket. And it's pretty cool. And it has actually, if we could someday, I don't have it right here, but you can see the back of it. It's very cool. It has like a stencil of Bookmap on it with the heat map and the bubbles and the delta and the rest of that. But don't forget that. Submit your trades. Explanation. That's all you need. And also, there's much more to it. Just keep doing it. Oh, there's the back of the jacket. See that? Pretty cool. So don't miss out, guys. You know, as my mother used to say, free is good. All right. Now, let's get into the business of trading. And I hope I went over the disclosure. Guys, did I do the disclosure? Trader Lab, did I go over the disclosure? Well, I'm not hearing anything, so I guess I didn't. So I'm going to go back. Okay, thanks, Rubicon. Appreciate it. Yeah, guys, I got to take care of a little business here. You know, part of the thrill. General disclosure, all Bookmap Ltd. materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of losses, not suitable for all investors. Past performance is not necessarily indicative of future results. There. We are disclosed. Now, let's get into this. First of all, higher time frame. Now, this is yesterday's RTH. Now, let me explain. And you should watch every stream if you're interested in seeing a consistent application of a trade plan and how it works and the stops and the rest of it. Based on the behavior coming in yesterday, it was shorts from the high of the day, and you can see this yesterday, and the initial target coming down was 64.50, then 57.50, then the low of the day here, stops to this outside edge. This was yesterday's, and this is up to here. Now this is actually yesterday. Short from up here down to here for scaling, and then it was to, take out the longs that are under here. Market goes up to go down. But what happened? Our short was at 76 yesterday. If you look at yesterday, this is what's so important. This was the ETH high, 76-ish, 75, and the ETH low was at 57. This is the retail price from yesterday. So yes, yesterday's ETH low was here, ETH high was there. So the first trades were short from there to there, to there, to there, there. That was yesterday's plan. And then what happened was we got to the first location. Then it was, we'll see you later. Tom, I'm going to send you a postcard. Oh, thank you. Let's look. Now this is yesterday again. Let's come back. This is where the first shorts were. ETH high, 76. And the idea of this short from here yesterday, which was the open, was to come there to 64, to come there, and to take this out. Does that make sense? And then this low. So, and now let's look what happened yesterday. We found too low, and then this is a low volume area. So if it's low volume, that means the shorts who sold here day before yesterday, and this is what's important to know, a low volume zone because of the urgency of the selling the day before yesterday. Well, the market is short. If I come back up, what does it do? It begins to squeeze Ethereum, and that creates the acceleration up and to take out day before yesterday's high. So once we got turned around, and if you remember the stream from yesterday, and that's why I always suggest you go back and look at these things, we had our last longs over here. So that's narrated in the stream, and this is called mean reversion trading, and that's yesterday. Now, let's come a little further. What did we get from yesterday? Remember, so we had yesterday. So this is the down day where we had the squeeze Ethereum. This is yesterday's low. Really? Yeah, remind me later. We'll see you later. And we squeeze. Now, what about today? Where's the low volume area? It's here. See, it's here. So if we come down, what does that do for us? Sets all this back up again. And we're trying to come where? The same trades as yesterday, except now there's stops under yesterday's low. So the goal today, and this is yesterday's now, is to, if we get it set up, get short, get through here, then we zip through here. The possibility is to get here, here, and out the bottom. Same as yesterday. And now, this is the current day. This is today. Short into the low volume zone. And this is the current low of the day. It's around, when I shot this thing, 68. And I'm looking for there. That's the plan. Who knows, right? I hope this is making some sense. Please give a like if you're visiting in YouTube. If you're getting something out of this, and remember, this is for educational purposes only. I don't call trades, but we get into real time. C'est la guerre. Now, let me take you into the first short this morning. And you're going to say, how could you sell up here? And I'm going to show why. The last auction is the ETH. Now, here's what we know. Yesterday's high is here. Now, let me give you a couple statistics. We're opening higher, RTH open. And this is the RTH open, but this is 829. We're not open yet. So but we're sitting around here. So I know we're outside of yesterday's value. We're above the highest volume from yesterday. Think of this like shopping. By the way, guys, I always have to say this to you. Trading is simple. Simple. And I mean it. I'm not blowing smoke up your, I'm saying it's simple. What you think of complexity is randomness. It is not complex. It is random. Let's start redefining what trading is. It is not complicated. If you know how to shop, you already have the basis of understanding trading. The function of the market is to figure out what's too high, what's too low, and what is fair. That is the market. Hold on a second. So when I look at the last auction, which is the ETH, and my ETH high, so you'll understand, is here. This is the new all-time high, ETH, and this is yesterday's RTH all-time high. Now let me show you why I have this on here. This is the full session volume profile. So right now, since RTH hasn't opened, it only has ETH. You see what that 60 is? 60. That's a low volume node. Let's talk about the language of the market. I don't use any indicators. I found all they do is what? For me, nightmare. What's the nightmare? Random inputs in a random environment. I don't want randomness. I want anchored inputs. So let me just make sure I'm still where I want to be here. Hold on. I think I scrunched this up a little too tight. Yeah. This 60 separates, because I want to show you the auction. So when I come in here, I'm going, well, what's it going to do? I have a high probability of taking out either yesterday's high or low. Coming in, roughly that's going to be about an 82% probability, either to take this out or take the low out. Well, trend is up. And based on yesterday's reversal, maybe, underlined, maybe we'll get this, and then if this is too high, where's my resistance? Here. Why is this too high? Because the ETH high is here, but I ran out of buyers, and I broke below this volume here. And now I have what's called a low volume node. So it's like too high, too low. And if I break away from this volume, which is like an auction, think of it like a store, and I leave it, then maybe this is now too high. I fell away. So now let's go a little further. And this is before RTH opened. Now I know yesterday's high. Now we haven't opened yet. This is pre-RTH, but I know it's there. I know the overnight volume point of control, which is the highest volume from the ETH, is here. So let's talk the story of the market. Too high. Separator between auctions or consolidations. That's really what an auction is. This is the outside edge where I fell away. Yesterday's high is here, the RTH. High probability of getting here. Highest volume from the ETH. My retail price. This is where most of the business was done in the ETH. Yesterday, the RTH highest volume is here. 68% probability to get there. Overnight volume point of control. 81%-ish probability to get there. Really? Yes. More. ETH high or low. See all of this? 97% probability to get there. Pick one. Do you feel lucky, Lewis? Which one? I don't know. Do you? I don't know. What was that 90? Going back, I have to show you the pieces. This is about the business of trading, not hocus pocus. This is how you plan your trade. This consolidation from this swing low to yesterday's high is its own little auction inside a larger auction. Think time frames. And the way the market works is it goes up to go down, goes down to go up, goes up to go down, goes down to go up, goes wherever to go wherever, goes up to go down, maybe. And then if it goes down, where are we trying to go? We're trying to come under the 64, under this, same as yesterday's short side plan, and under here for the stops, under here and out here. The targeting is out to 35, and that's today's potential, not a recommendation. Why is 90 important? It's the highest volume in here, okay? Where's my outside edge of this distribution of volume? 75. If I get below 75, I got 64, yesterday's low. Again, clear this, go there, go there, go there, there. So now I'm back, right? So if I come up, I have this, and this is another potential short if we don't blast through, and then it's squeezeteria. And I couldn't tell you which one, except I'm still short oriented. Coming back here, now look at the pieces. Outside edge, low volume, was over here. ETH high percent probability, and helmet. Now I'm going to take you into the RTH open. Now I'm going to take my grid sheet out, which tells me the following. We're opening in range outside of yesterday's value. That means the market is out of balance. So here's the possibilities. Open, go to the moon, right? But what do we know? This is what your books are not going to tell you, but you're going to hear it and learn it in the Trader Lab. It's so simple. The market goes up to go down, and the market goes down to go up. What is that? Why would anybody say that to you? Because the market doesn't typically run in a straight line. It goes down like yesterday. What did we do yesterday? We went down first. That means the shorts in the down leg, first down leg yesterday, which we took, there were buy stops. That they become the buyers if we turn around. And then the shorts from the, you had the longs, right? They got blown out. Then the shorts, they got blown out. Now yesterday's longs, they're getting blown out. And then today's shorts might get blown out. You see, it goes up to go down, goes down to go up. It's a rotation, and it happens in all time frames. So if the market is long from yesterday, what might it do? Go up to go down. And then what? Go down to go up. From where? Good luck with that. So let's start. 60. Outside edge. Yesterday's high probability. What else? Those who are still short or who did not get long yesterday, what are they going to do? The breakout buyers. Oh, I'm going to buy the breakout. Yeah, good luck with that. So anyway, and that might be the trade of the century, right? Meanwhile, back at the Tradeateria, what might we do? RTH open. What do we know? 82% probability-ish, past performance not indicative of future results, overnight volume point of control. What we know is we're opening on the outside edge of balance, which means either north, run like a crazy person, or run into this, because that was too high. So this, and then what? Now I'm going to show you first short. Narrated this in the lab, and I don't call trades. I take stops. Do you take stops? Welcome to trading. Oh, by the way, what about casinos? What do? They pay to gamblers. What are we doing? Same thing the casinos do. The difference is there's gamblers and those who are, quote, think they're trading, but they're just playing a video game. Fine, we need them. And then there's traders. And what traders do is they play games, same as the casinos, but they only play games that have a statistical edge. So where's my outside edge? Well, I know from the ETH, so I got this, all right, up here. Now let's look at the first trade. Now this is the RTH open. Let's look at the behavior. Sellers, buyers, I'm sitting here, I don't know. High probability to go here, so I'm not doing anything. I'm not getting long. I do have support here, 82% probability, and I'm outside of value, but I know the market's long. So I'm certainly willing not to do anything, but I have to get through here for me because I found too high in the ETH. And again, I have no idea. Watch. What do I know? Let's remember what I know. Retail price from the ETH, too high in the ETH. If this becomes too high, I can come back here and either check this, go up, or get below it, take out the buyers who are here, the rabid breakout buyers, thank you. And then if I get below here, I got this and down the financial food chain. Let's watch. Now, stay with me. Anybody see the movie Gladiator? Russell Crowe says, stay with me, stay with me. And he also says something, okay, I'll see you in Illyrium, and we'll all be taking care of our wheat fields in the happy hunting ground. Catch you later. Anyway, opening scenes. So, area. Now, what I do is I trade locations. And the reason I do that is I'm not going to let myself go, oh, do I sell this? An impulse. I know where the trade might show up. I have a couple of little sayings. They're kind of cute. You got to anticipate who participate. When this Trader Lab, the idea is you already know where your trades are going to show up. You don't know if the trades are going to qualify. So you know. If you know how the market works, and this is what I focus on, structured trading, I call it, because it's structural. Why are we going to look at this? Because the language of the market, I don't use indicators, I speak the language, and I had to learn the language. What does it mean when this behavior happens? If you consider, let's go back to the basic premise, this is shopping. If we can identify locations where price and behavior took place and we exhausted, then if we reject it, we can return. So if I find too high, and this is my current retail price, I can return to it. That's called mean reversion. It's the primary trade I suggest developing traders learn. Now let's watch. Here, I'm sitting here, and let's narrate together. First of all, we know this is the opening swing low. Buyers in this leg, remember, what does the market do? Market goes up to go down. And who knows where up is, right? Part of the thrill. But I do know this is the opening swing low. And this was support. ETH. So far, is starting to make sense. So right here, I'm going to put a little mark in here. I'm going to call it opening swing low. And I do this because I get my OPIC. Don't you? Maybe you don't. I do. I'm going to be looking at this because I'm going to look for triggering, and I'm going to read order flow. Let's try to look at the order flow together. Location, location, location. Clueless. Got this. Got my breakout traders. I got my sell stops trailing the market. Those can become my sellers. I need the sellers, don't I? Who are the sellers? The buyers. You're going, really? Yeah. Watch. Location, location, location. Now, I'm looking at this. I'm going to pull this down. I'm going to take you into microstructure now. I kind of think of these, you guys think of multiple time frames. Time does not regulate this. I threw time out the window because time is a structure we created. What actually is happening in the auction is how long does it take? And that's not time-based. It's behavioral. How long does it take before the participants determine a price that's too high? And what does it look like? Here. Buyers are here. Sellers are here. Break high. Too low. Support. Chop, chop, chop. What is that? Too high, too low. Break high. What's that? Support, support. Chop, 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 chop. Buyers are here. Same guys who are there. There's the liquidity. Sellers are here. There's your icebergs. Break high. Support, support. Break high. Support. Break high. Support. Chop, chop, chop. Resistance. Support. Break. Location. Liquidity. See a change. Watch. Break low. Right here. Location, location. Order flow. Order flow. Bing, bing, bing. Trigger, trigger, trigger. Short, short, short. Let me throw this on here to help you. Now, I draw these things. You're going to go, oh, yeah, what do you do that for? so I don't forget that there was a change in behavior. What else happened right here? I'm going down into the subatomic level for you. I want you to see what I do. I'm not saying this is good. I'm just saying it's something. Let's narrate this. It's actually a little off. Roughly here is where the volume is. So as far as I know here, it's going up, except I'm at a location now. So, and the change. So you screenshot this, watch. Notice where, so right here, the counter rotations are like not absorption, higher, going higher. What's happening here? Change, watch. Change. The short was at 25. Now, break, test. This, now, this is the short. This, all these are the short. Stop has to be there or wherever you want to put it, me, up here. Then this is the target for risk neutral. Here's the possibilities. Too high, too low, retracement. So too high, scale, helmet, opening swing low, stops from these guys. Watch. Get through there, next target here. See the behavior? So where's resistance? We have this. This is now our retail price. Our outside edge is going to be here. Notice what you get here. We have that is too high, low volume node from the ETH. Now we come down. This is the next target, 67% probability, liquidity waiting for us. It's like a catcher's mitt. And this is an outside edge. This now is a low volume node. Well, I don't want to switch levels on yet. Liquidity, sweep, short. This is another triggering structure in the trader lab. Notice, you see, there's a compound number of elements. This is how order flow. So what I have is outside edge. Is this too high? Liquidity, and the sweep is they say the icing on the proverbial cake. Let me show you again. I'm going to show you the trigger. Now watch. Mid, VWAP, behavior, location. Okay, you see the LVN. It's right there, 475. It's the lowest number of contracts at this edge. This is called mean reversion. Now, what is going to be disturbing is the retail prices right here. I am looking at this price because it has a 67% probability. I'm looking at the mid, I'm looking at the sweep, I'm looking at this, and I'm going to show you something else. I'm taking my time. I hope you don't mind because this is trading. I know you're probably going, come on, right? Come on, give me something fun. Oh, well, you know. This is the highest volume for the day in this developing full daily time frame. In a fractal or shorter time frame, this is the high volume. And this yellow line doesn't have to be here. It's right there. This is a store. Let's go back to the shopping experience. This is the supermarket. Higher time frame, supermarket. This is the highest volume from yesterday. The market checks volume. The reason it does it is it's trying to determine what's too high, what's too low, and what's fair. So it's always going to be testing too high, too low, what's fair. Well, we find the ETH outside edge is too high. This is now fair in the supermarket, but in this convenience store with this open, this with the sweep. Now this is a trigger. an outside edge. Look how this is the same structure as the first short off the high of the day. Is everybody tracking? Can you see how pieces might fit together? And please give a like if you're visiting in YouTube. It's nice to be liked. Okay, let's go. And don't forget, forward this to your trading buddies. If they are stuck in trader Groundhog Day timeframes and indicators with random winning trades, which anybody can have, even just a random buy-sell indicator, and they're not able to be profitable and create consistency, they might want to visit Trader Lab. Sweep, liquidity, location, outside edge, target. This is a continuation trade. Watch, here's the trigger. Sweep, and there's other things you can do, but let's just stick with this. Break low, too high, pull back here, break. So short, 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 and if it retraces, short. Anyway, trigger. This, break low, sweep, what do we anticipate? Rotation. And then what? Back, and what does it do? If this is too high, look at the story. I'm not paying that. Sweep, I'm out of here. Short. Next target, break low. Looking for reversion. This is, see, look at this. I'm just pulling something out of the left field, let's say. Sweep down suggests rotation up. Sweep up suggests rotation down. Sweep down suggests rotation. And where did we go? Back there. Where did we go? Back there. They are the same, except multiple time frames. Are you guys tracking so far? What is this, you ask? How about a short or nothing? Trade management. I get the sweep. What don't I get? I don't get it to cross over this liquidity. And there it is. There's absorption. There's buy stops. And instead of getting that, I get that, and I fail to get above the sweep. Another short or trade management opportunity. Let's watch. Where do I come back? Do you see something interesting here? Do you think if you actually understood how the market works and you didn't get hung up on your little indicators and throwing spaghetti against the wall, getting random outcomes? Oh, and what's this? What is this? Low volume. Isn't that our low volume node? So what do we have here? Short to what? ETH low. You wrote this down. What was that probability? 97% probability-ish. Past performance not indicative of future results to get to the ETH higher low. Short to there. Retracement to the outside edge. Short. And if you scale ahead of here, big sweep. This is important. Next target, 90. There it is. Just trade targets. I don't know. This is another target, the 85. All this is on the price map and in the Trader Lab. Let's come back. I got to show you how this works. Try to show you how it works. 85. And if we get below there, 75, then remember, 64, blah, blah, boom, right? Let's come back. So the 85, so we had 90, 85, then 75, and who knows, right? Part of the thrill. 85, next target. Now, I posted in Trader Lab, you could be done here because this is an outside edge of a higher time frame. Let's look. VPOC migration. Now, outside edge is going to be out here, LVN. So if we come out here, subject to your plan, this could be a short to come back here. That's called mean reversion, just letting you know. Out here, subject to, by the way, see this big sweep? What do we anticipate with sell sweeps? Counter rotation. What did it not do? Remember, narrate. It's called if this, then that. If not, then what? If this, then that. If not, then what? Then that. Or nothing. You could be in your Barca Lounger now. You could be done because 85 is the next target. And then under there, 75, right? So let's look. 85. I posted in Trader Lab Barca Lounger, which means, but what do we know? What do we know? What do we know? I have an outside edge up here, and subject to my plan, this might be too high. I'm going up in time frame. Remember the 90. Let's just see what it does. Liquidity. VPOC migration. Sweep. 90 area. Now, this is an aggressive short, and this is subject to. What is this? Too high? Too low? High volume. Liquidity. Break low. What is that? I'm not paying that. Little store down the street. Remember shopping? I come up here. VPOC migration. New retail price. What might happen here? If I come outside, I can now do mean reversion, and I can look for a test of the first hour's low, which might be down here someplace. And we have a high probability. What was it? Write this. You wrote this down. I know you write it down every day. 98% probability to take out either the first hour's high or low. 30% probability-ish to take out both. So if I'm running a 98% probability to take out the first hour's low, might I only be taking shorts? Sweep, resistance, that's where the sellers took over. You see them? I come back here, stops are here, micro high volume, sweep, short, entry is there, stop goes out here, not there. Looking for the first hour's low at 9:30 to get taken out, which is wherever it is, 9:30. Down here. Okay, so that's the next target. So far, no longs for me. What can I tell you? I'm clueless. And there's that 75, remember? Now, as far as I know, going to zero. And remember, I know I don't know. Now let's look at the change. Now here's resting liquidity, and there's another sweep. You've been watching these sweeps, right? Sweep, counter rotation, resistance. Sweep, counter rotation. So resistance, possible rotation. Liquidity. Now this liquidity, let's come back and look at some other stuff. Notice the behavior here. Too high. This thing is sitting in the book. Is it too high? Sweep. Change. Right here, trouble in River City for the shorts. Okay. What do you do? Well, here, counter rotation, too high. Here, going to zero. Here, sweep, resistance. Now, when you get this kind of do you notice the change? Here, I had this, but it was a sweep. Okay. Absorption. There's your sellers. Leg down. Liquidity. There's a difference here. And again, for all I know, test going down to targets below. And where are my targets, by the way? Here, under yesterday's low. Why? Longs are sitting in here. So I have no reason not to think, and again, I have no clue that we're not going to get here. So let's look again. I have the sweep. Now I have support, and I see some aggressors. Absorption. As the market's coming down, this is the delta. And you'll notice this is the highest delta coming down in the sweep. That's absorption. Now, I don't know anything until hindsight. So I don't predict because I'm clueless. And if you think you can predict something, I'm going to suggest you change your thinking to maybe. Because maybe it'll do this, maybe it'll do that, maybe you won't do any of it, and I don't know. I am very specific in my self-talk. I had to learn that there's a voice in my head all the time, right? You know, and this voice is always talking to you. I call that Hyde, Jekyll and Hyde. Hyde is the one who says, I need confirmation. I'm predicting it's going to do whatever. I think of it as it might go here because that's where the stops are. Isn't it logical? Also, you remember 64, where did that come from yesterday? It's a very important location. Right there. That's support. If I get under there, then I got that, and I'm off to the happy hunting ground, and it's 35. If I can't get under there, then all I did was take these longs from yesterday and throw them under the bus. And remember, 75 is another location. I got below it. So as long as I'm under all this, you know, it's happy days are here again. So this is the IB. So now there's a couple more trades. Now this, no clue, okay? So any shorts going for this, runners who get taken out, no problem. Let's come back. This is the IB up here, and it's a low volume node. Liquidity jumps in the book. I'm going to go, and don't forget, this is here, this is here. These guys come in. So I'm looking at this, and I have two trades possibly here. I have a short to come there to the high volume, or if I get back inside, it's called the IBF, which is a mean reversion or a long. So let's look at this is a short. Let's look at it. Outside edge. Now, the thing with this is, we know we have our buyers. And the last shot at the moment for the shorts, at the moment, is this. To take a short for what's called a continuation trade, and it's a mean reversion trade. And all you're going to try to do with this, if you take it, is to come to the high volume, which is now sitting here. So it'd be from there to there, and then to test this. This trade, you took this one. Here's how this would work. And I don't remember exactly. It's here. So this here is your trigger. Break low, resistance, break low, resistance. This is the entry. And you would not get a scale, and this would be a stop. Now, other traders are going to take this. Once we clear this, they're going to take a long, because this now is going to be a squeeze. Let's see the behavior. Now, where's my next outside edge? Let's watch. It's still a short for me. I just got squeezed. Part of the thrill. The target for this long is the high volume, which I think was here at the time, maybe, or maybe not. Yeah, there. See, the IBF, which is along from here, the primary target is that. That's called mean reversion. We're reverting from the other side. Now, this sets up another short. Let me show it to you. So here, VWAP, VPOC, and this is a more of a advanced short. Let me explain it to you. Here, I get the target for the long. I come outside to the retail price. Remember shopping. Is this too high? Well, I don't know. There's a trigger. There's the break. There's the test. Same as what we had down here, except this one took a stop. Same thing. Trigger, VWAP, trigger, resistance, break low. Watch. VPOC migration. I'm not paying that. Too high. Short to where? To there. So the short is there, there, to there, if it fits, and then hold for a test of the low, or just manage the trade. It could stay inside. So here, where did we come? Is there a method to madness? Well, there's madness. I don't know about method. What's material? Let's just put a little box around this thing. So we know not what will happen, but if we're using order flow and we understand the market, I don't use indicators. The buyers were here. So if I take that short, I got a scale here in case I just come here and revert back. Once I clear this, this is my area. There it is. You see it? Target. Then it's whatever, right? You with me? Where do we come back? I don't know where we are here. There you are. This is the Trader Lab. So this might not be what you think trading might be for you. You may want to be clicking the mouse. I kind of found, at least for me, that I just want profit. I'm not interested in activity. I'm interested in taking intelligent risk. What else do I know here? If this is the retail price and it moves lower here, where was it too high? These are more advanced methodologies. You can learn this in Trader Lab. Where's my liquidity? Too low, too high, VWAP, break low. And this can, and now I already hit my target, don't forget. So what I tend to do is I just trade chunks, I'm into these, call it rotations. Because how do I get paid for the stops I take? That. So if I take that, let's talk about the stop. So if I get short here and take a stop, which is a couple of points, do you think I'm having a profitable day? And I always take stops, not every day, but I don't think I'm not going to take a stop. Why would I want to think that? That's ridiculous. But here's what I know. Can you see it? So if I get short, I already know my buyers are here. And and I don't know if it's going to take it out. You see, I just put trades on, I trade the targets, and I let the chips, as they say, fall where they may. And that's a gambling term, let the chips fall where they may. I know my buyers are here. And if I see my buyers, I just cover. I don't play both sides. And I'm only talking about me, I just want to trade from what I perceive to be a primary side. And I perceive, now, second time down. Now, let's go a little further with this idea. And the market may not get here again, did we make a new low here, guys? I got to look. The low is 68.5. We got 6 to 69. Might be the low of the day, right? Right here. So maybe that's the low of the day. If you had these trades that I just shared with you, would you be okay with that? Would that give you a profitable business if you actually develop an understanding of how the market works? I'm not using indicators. They're the problem for me, not the solution. I'm not saying you can't use indicators in alignment with this, but the indicators are like random, just pieces of spaghetti. The only way I have found to know, and this is the knowing, is to know where an edge is with anchored inputs. Now we go to our casino reference because they have a proven business model. So instead of making this up with the belief that you can predict what's going to happen and all this stuff, figure it this way. If the casinos can't know what's going to happen on any individual hand, and for us, individual trade, what makes you think you can know anything? Anything. You can't. So what do the casinos know? Let's use that proven model. They know they only play games that have a statistical edge. And how do they get that edge? They have what's called an anchored input or anchored inputs. The inputs are always the same. So in other words, how they play the game. So blackjack is 7 cards, turn the cards over this, shuffle the deck X amount of times, all this jazz. So, and they play it. They don't know the cards coming out of the deck. They don't know how gamblers play the cards. That's all the randomness. That's our environment, same. We don't know what the other participant's going to do. We don't know if a news event's got, we know nothing. So what we do need to know is not random inputs. Oh, my oscillator's at 60. Oh, it's at 70. It's almost there. Oh, my RSI is over here. Oh, I got divergence here. Well, so what? Because it's all random. Now you pile multiple time frames, right? And multiple indicators. And why are you doing that? To squeeze the risk out and create certainty. Casinos aren't doing that. They're not changing the game. They're not using random inputs. You can't measure random inputs. You already got a random environment. Remember I said, what do we want? Certainty. What do we get in this business? Randomness. You're trying to solve for certainty. You're trying to avoid risk. And the reason you're doing that is you're wired for that. It's just part of our innate primal wiring to avoid danger. Your primal wiring sees this as danger. What's going to happen? I don't know. Well, let me tell you what I know. I know what might happen. I know where it might happen. I know this might be too high. I know if I come back here and it's still too high and I can't get back above this and this, that I can come back to where it was too low. I know I can take a short here if it's in my plan. And I know if I can get below this low, and I know I got buyers here, I got to clear this liquidity. If I can clear this liquidity, what happens next? Yesterday's low, this, and the targets are still open. And it's not a, quote, prediction. I'm clueless, but not ignorant. This is Trader Lab. It's called structured trading. It's based on how the market works. That's what this is. And if you're interested in the business, I would suggest you use the link in the bottom of YouTube. Get yourself the Trader Lab. There's no cost for it. And I understand, by the way, I'm not a vendor. I've just been doing this 46 years. And the other thing is I've done everything you've done, and unfortunately, much, much more. I had more time to do it and more time to waste time. And when I started, there was no information. We had no PCs, no internet. It was a book or a seminar. And how are those books working for you? How are those chat rooms working for you? How are those internet marketers working for you? And is it working? Now, here's the thing. Everything I researched had winning trades. I also came to the conclusion that if I used nothing, I would have winning trades. If you did something, and there's something called a coin toss exercise, where you just pick, you flip a coin and you go buy, sell, and sim. You could still be a winner. But over time, you're going to be a loser. 50-50 doesn't have an edge, right? Every trade, the outcome is 50-50, but individually. But the edge shows up over a random distribution or large sample size. So emotionally, we're all hung up on being right because we can't handle loss. You cannot get validated, your self-worth or your brilliance validated in this environment. The way you measure yourself in this environment is your plan. I always say, and Trader Lab is about the business. So if you understand the business, you're not going to be trying to fulfill your psychological needs to avoid the pain of loss and that, quote, I'm not smart, that's validation of your wonderfulness has nothing to do with this business. The dealers just deal the cards because they're playing a game with edge, but they don't know the outcome, right? And casinos have done really well. They pay the gamblers. They give you the cocktails and the tickets to the buffet. They also, if you're a high roller, they fly you in, comp your room, the rest of it. How can they afford to do that? Because they have an edge and they just execute the edge. They don't worry about the individual hands. We do. That's where we fall down, and that's Hyde. Jekyll and Hyde. Hyde's very smart in hindsight. Like if this is the low, whatever, where's the low of the day? It's here. Yeah, I knew you should have got out there. Who's that? What do you know? What do I know? I don't know anything. I know what might happen. I know where it might happen. I know if I take a short here, if it's isolated and it has an edge, I know I can go there. I know if I don't get through here, I can squeeze the shorts out here. This is what I know. I have a sweep here, and there's a couple possibilities. I'm going to come back here and squeeze. So, subject to my plan, I can just trade there to there. and just take it and be done with it. If I break below here, I now have more targets below. I can put shorts on from other locations. Or I'm in my Barca lounger and I'm taking a nap with my mint julep. Does it really matter? I am detached from this. It took a lot of time to accept I have no control over what happens here. I do have control over what I do. If I have a plan, I'm not making it up here. I already know what I'll do. I don't know what these guys are going to do. I don't know if right here I'm going to come across and squeeze. I know where my exhaustion was. And I know, why am I back at the low of the day? Is it because this means I'm going higher? Or have we only taken out and squeezed because we came outside on that reversion long from the IB? All we did was come to here, set up another short, back to there. What is this? Another short. Where to? Good luck. I don't know. Do you? Don't need to know. Why don't I need to know? I never can know. What I do then is I take my trades. I understand that this is not necessarily the low of the day. I understand that why didn't I get back above this? And why now is this too high? Why am I back here? Now, I have a sweep. I can do the following. I can come across the range and come up here, which would be a short for me, not a recommendation, to come back there. I already know that. And then to take this out or not. My trade is shorts only today, which is in the Trader Lab. And this could take out the high of the day, 29 to 30% probability. Higher time frame trend is up. But where's the stops? Let's come back. Where's the stops? Yesterday's low. Where's the retail price from the day before? Yesterday, here. Where's the retail price below me after the stops, I should say? Where's my fuel? All the stops under here. I clear this. I got this. And where was my other target, you ask? 35. This. So if I get below this, I got this. Not a recommendation. If I don't get under here, say la guerre. Trader Lab, you got questions? Post them. I'll do my best. Thanks for your patience. Is this making sense? Give me a thumb up if you're visiting in YouTube. This is the Trader Lab. This is the business of trading. I'm sorry if you're looking for a video game. It's entertainment. Entertain yourself. I always say go to the casinos, get the cocktails and the ticket to the buffet. By the way, I was in a Bally's a couple of weeks ago. The ticket to the buffet before tax was like $30. And the buffet was only breakfast and lunch. I don't think I can afford the ticket to the buffet. If you're going to gamble, guys, just go to the casino, have fun, and write it up as entertainment. That's if I ever go to casinos, which I wasn't there to gamble. But I stayed at this Bally's, and, but I saw the gamblers there, and I thought to myself, I understand why they're there. Do they understand that they don't have any edge? If you're gambling and you're making it up as you go, do you understand that you're just gambling and you're entertaining yourself? You're playing a video game. One of the things I think is problematic for the, quote, youth is that they grew up on video games. So they've kind of trained themselves to respond to hair trigger response speeds and quick triggers. That leads to overtrading and impulse, FOMO. So you very possibly are bringing a certain conditioned belief system to trading and think you can kind of connect the two. They're not connected at all. The fact that you can click a mouse in this business is not the same as playing a video game. If you're playing this like a video game, you are not going to be here, in my opinion. And I know we all think we're the exceptions because we're special. I don't want to disappoint you. You are not special. You are human. and we're all subject to the same chemicals that are released in our brain, the endorphins that we get from clicking the mouse. This is not a business of endorphins. This is a business of intentionality and plan. When I come to the market, and if you're in Trader Lab, developing traders who built the plan, they already know what they're going to do. What they don't know is what the market's going to do. So we already know where we will trade. And then as the market develops, it creates locations for us to trade. Out here as an example, or under here as an example. These are examples of possibilities. I'm going to turn on levels now from Investor RT, which is by higher time frame software. It exports them, and it helps me identify where there's separations in the, let me just see if I can get this. Okay. In the distributions. Distributions are consolidations. Let's see if I got this. Yeah. You'll see them coming on the screen here. And what they're going to show me is high volume, low volume, high volume, and what these are. So, when I talk about shopping, let's think of this as a supermarket. This is the day, the whole day. And the highest volume so far for the day is here. Think of this like the retail price. This is you in the store in the supermarket. Your tuna's $1 there. Out here, the tuna's $1.50. And the buyers, it dries up because I'm not paying that. Well, let's come back to retail, $1. But what happens? Where's it on sale? Out here, and the volume dries up. So it creates this. In the little store down the street, this is the same. Now, multiple time frames. What is this? I'm not paying that. Watch. VPOC migration. Now, I'm taking you into multiple time frames. I'm using the term time very loosely because there's no time. It's based on the behavior. So the clock is not, it's the auction. Liquidity, retail price in the supermarket, if it's too high, liquidity, absorption, break low. New retail price. I'm not paying that. Okay. Too high. Break away. Support. Break away. Resistance. Resistance. I'm not paying that, Tom. Get out of here. Break away. Too high. Too high. Support. Right? Now, if I come across, I'm going to squeeze, and where's my next trade? Out here. Not paying that. And that would set up mean reversion back to there. In the small store, this is too high, and I'm aligning the little store. Let me show you. It's so wonderful. I got to tell you, now I've been doing this a long time, and everything you've done, I can claim quite realistically, I've done. And the reason is I've had more time, and a lot of the stuff I did was when this stuff was new, so oscillators were new. I thought that was the holy grail. You see stuff for the first time, and it was all new. So I spent years pulling this stuff apart and then trying to create my own. Built trading systems based on a lot of these processes that you guys are familiar with, but I made them. And when I was trading the big S&Ps, so the big ones, I then also applied oscillators to advancing, declining volume, and advancing share, issues declining, and created oscillators on everything, and for divergence and the rest of it, and then built systems in multiple time frames. So there was, and it was position trading when I was managing dollars, and I did manage a pretty large book, and was on a trade desk, and I had traders that I work with and that I let's just say coached, trained, and unfortunately disciplined, because this is a business of no nonsense. And a lot of you, if you go to romper room chat rooms, I could tell you in the professional side of this business, you'd be thrown out, not asked to leave, escorted out, and invited not to return. That's how serious this is. When you're working with millions of dollars on a desk, there's no room for romper room. Now, I'm not saying if you come to Trader Lab's a great community. It's serious, but it's business. So, and some of you, I understand this is entertainment in a video game, and it's playing and posting nonsense and all. That's all fine, you know. But that's not what the Trader Lab is. This is really about the business. So I just want you to know this might not be a place for you to come to because it's really serious. And our senior trader has over 50 years. I've been doing this 46. I suggest if you do come to Trader Lab, and you can use the link in the bottom of YouTube, there's no cost for it. But over my years of doing this, my patience for traders that are not serious is not high, because when I was running a desk, those traders would be asked to leave. Listen, if you think of yourself as a professional and you're on a sports team, the NBA or NFL, and you're a high tier performer, would you ever get to the NFL by missing practice, not watching replays, not doing the work, not spending hours and hours practicing to improve your craft? If you're not approaching this business that way, then you're really just a hobbyist. So then Trader Lab won't be for you, because this is about helping traders who are serious about it create a career path and sustainability. When you, assuming you do the work, and no matter what you do, it doesn't mean you'll be successful. You have to tighten your belt, and you have to also unlearn all the things that you believe that may not have anything to do with the business. We believe we can predict things. We believe we can avoid risk. And those beliefs are built on our need to do those things. But we can't. So we're fearful. We're trying to solve for something that does not exist in the business. We cannot be right. We cannot create certainty. We can create probability. Certainty and probability are not the same thing. When I trade, I'm very confident in my plan, not in what's going to happen. I don't know what's going to happen. Do you? Well, I don't. And I spent years, and now just to give you an idea, when I first started, we didn't have candles. We didn't have any of this. Actually, we didn't have oscillators. Wells Wilder was a new thing. So it was, ADX, DMI, parabolic reverse thing, stuff you guys are probably familiar with. Then we got, Elliott wave, Fibonacci. I went into Fibonacci like, unbelievable. Time cycles, Fibonacci. Well, this makes so much sense. Look at those rabbits. Okay. I even saw software advertised in Commodity Magazine. This is before it was renamed Futures, which was moon cycles. They actually had a piece of software you could buy, and it was expensive. And it showed when the moon was near Uranus or something that, the market would do something. Anyway. And that's another term, by the way, not the moon by Uranus, but snake oil. Snake oil's been around as long as snakes. So why? Because the marketers are always appealing to your desire for certainty. So and if you'll notice, everybody has to say, including me, past performance is not indicative of future results. The fact that this is a short in my trade plan doesn't mean anything. The fact that getting short at the IB low, which was wherever that was, back, over there, and a stop is what it is. Then the next location sets up the next short back to here. It's just what it is. This location sets up a short back to wherever. And either now there's my sweep. That suggests if I don't break away that I can come back here. And if I get taken out of the last shorts, then all it means is I'm out looking for the next short to come back here. I already know my trades. Or are you doing what? Do I sell this? Do I buy this? I know what might happen here. I know this is important right here. And I know that yesterday's low, what was the probability? Well, we got yesterday's high, but I know there's fuel here. And I know 64 was a big test yesterday, which was the reversal. If the market goes up, where's the fuel? Below. So that's why shorts only for me today. Doesn't mean that this isn't that we already have the low of the day. Doesn't mean it won't take out the high of the day. It's shorts only. And this is a trade plan, not a prediction. How many trades do you need to become a profitable, sustainable trader? Is it number of trades or is it risk reward? Is it percent of winners that you concentrate on so you can get your dopamine and you can get that approval? Look how smart I am, and that validation of your self-worth. Or is this business? You just step up here and say, here's what I know. I know because I understand the market. And I understand auction, which is what the truth of the market is, that if this is too high and I can't get here, I know I'm willing to take a stop, come down, and go for this. What do I know? Not what will happen. There's stops here. What else do I know? This is the next target. What else do I know? I got stops here. And my target was 35. And where does it all come from? The things I know, not what will happen here. So where's that we trying to go? Under 64, down to 57, take the stops under here, get the stops under there. And this is my trade. What am I actually doing? You're asking. Good question. Outside in the 64. To the outside in the higher time frame. Let's get back to our little shopping experiment. What is this? You guys have big box stores, Walmart, Sam's Clubs, Costco, and if you're overseas, do you have those big box, high volume stores? This is the higher time frame, intermediate time frame, by the way, not high. High time frame is bullish, But we're not trading that. We're day traders. So as I go up in time frame, I'm expanding. I'm pulling the lens out for here. So this is my target. Never has to get there. Not the point. Not my job. Yesterday's low. See? This. The day before low and out, down the food chain. Does this make sense, guys? Can you see how you can build out the business of trading and maybe create a sustainable process? And it doesn't mean you'll ever do it because you're going to have to change what you believe trading is. That's hard. It was hard for me. I kept trying to make my indicators, and I built trading systems. I went way beyond indicators, okay? I mean, code, and I spent years with it. You see, my thing is I spend years. I'm a persistent researcher. So when something works randomly, and everything you do works the same as for me when it didn't work. And that is random winners. Remember, gamblers, random winners. They win. That's why they keep coming back to the table. Who win? But who wins over time? The house. So I had to let go and try to get more certainty and more winners. I had to, at some point, go, why am I getting winners? And I can't get more winners. So I have to keep fixing it and making it better. And that's where curve fitting and multiple inputs come in. Here's the problem. Random inputs in a random environment is noise. All you got is garbage. And don't be offended, I'm calling it garbage because it literally is. But what makes it garbage? You can't measure random inputs. So you don't have anything that's measurable. There's no edge. So that's the gambling. So if you're in a random environment, one side has to be anchored. And that's in my primer webinar. That's available in the Trader Lab. It's got about 34,000 views. You might want to think about that one. The first one. And I'm not a vendor. Remember, I'm just doing this 46 years. It's going to be 47 soon. I don't know. But I've done everything you've done. And I can tell you I've done a lot more. And it took me a long time to figure out why I couldn't be successful long term. And I had, believe me, profitable runs, profitable weeks, profitable months, and it was always breaking down. I thought the solution was a system so I could optimize. So what I was doing was going back and then do what's called walk forward testing. So you take a chunk of data, maybe 6 weeks. You go up with 30 days of data back, the first 30, to create your optimization, and then walk it forward to the next 2 weeks. So there's your 6 weeks to see how well it holds up. And it's always decaying because we're not trading last week. We're trading right here, right now, as it relates to yesterday and the day before. That's pretty much where we are. That's in the day trading thing. Now, when I did it, I was a swing trader and a position trader, so it wasn't the same. But time frame is just time frame. So as a day, and there was no day trading back then. You couldn't day trade. You had to pick up the phone, call your guy on the floor. So when I was managing money, it was pretty much write it on a ticket, timestamp it, pick up the phone. How would you like to be doing that? No domes, no volume, nada. That was the way it was. It was analog, Anyway, neither here nor there. I diverge. Still short. Do you think? So here's the thing. If you're taking this, you have to get risk neutral. And is this a strong low? No. Why are we coming back to it? So you could do is, if you took this as a short, you got this. You got this to there, back to there, back to there, back to scale, back to there. And if you get below here, you may have the rest. So I've had no longs today. And based on the trades I've shared, and there's other trades you can learn in Trader Lab, but we just keep it simple. What's the point of making it complicated? It is random. So if you understand market mechanics, you understand where your trades might show up. So if I see this, I'm not selling this. Why? The low of the day, sir. And I got my buyers there. There's my rotation. Now I'm coming back against this where I had my sweep and my sellers. So I got sellers, buyers, sellers, support, buyers, sellers, buyers, rotation, buyers. See, I could just be, do whatever. And subject to my quote time frame out the bottom or not. Are you guys tracking? Is this making sense? This is the Trader Lab. You used to use Fibonacci? I used Fibonacci for a long time. And why? Look at that. It actually went to the extension. Oh my. Oh, it's a 32% retracement. Well, that's pretty bearish. It couldn't even get to 50. So what? Who cares? Oh, Elliott wave. Which wave are we in? Well, let me wait for the wave to complete and then I'll know. I'm in one of three or I'm in an ABC. Oh, what am I in? Spent years with Elliott wave and Fibonacci combined. When I say years, yeah, years. I spent years with harmonics of Fibonacci harmonics time cycles. You want to talk? Joan Rivers, who I don't know if you guys remember Joan Rivers. She used to host the Johnny Carson show, which is a late night talk show way back. And she would say, let's talk. Well, come on. It all works randomly. This is what I call the catch-22 of trading, is everything works. If you put a blindfold on, or let's say you don't put a blindfold on, you have a random buy-sell generator. You don't know if it's going to be buy or sell, and you pushed it, you're going to have winning trades. If you had a magic 8-ball, we had one on the trade desk, I'm going to say, it would say, should I get long or short? It would say either yes or ask again. It's random. So if random works, then your random inputs, which they are if you're using multiple inputs randomly, like divergence, wonderful thing. Well, suppose you understand how the market works and you're using something, for divergence, if you will. Now, we have divergence right here. This is delta divergence. Going up, just look, very simple. And you got it here too, by the way. Coming down, sellers. Oh my goodness, Lewis going to zero. Sellers divergence. Less delta, lower. Less delta, what is that? Divergence, sweep. What does that suggest? Absorption. A couple different ways to see it. And then this. Now, what happens on the other side? Going to the moon, Alice. Location, location, location. What do I got here? Where'd my buyers go? I don't know, Tom. Where's that buyer? There you go. Higher. Oh, gosh, going to the moon. Selling icebergs. Location, location. Less buyers than there. Divergence. See it? Now, sellers take over. Sellers, sellers, sellers. There's my buyers. Higher. Where's my buyers? I don't see them. Do you? Sellers in control. Test. Where's my buyers? I don't see them. South. Here. Here's my buyers. Where are we going? Down. Now what? Sellers. Absorption. Location, right? You have to scale. VPOC migration. Let's watch now. You see how this might work? So you guys are indicator peoples. What is this? It's divergence. What do I need? An RSI? No. This is what counts. Or whatever, choose your poison. Doesn't matter. Whatever works for you. But here's the thing. Do you know where an indicator might prove valuable? If you're relying on indicators to define the market, they are just one-dimensional. They have no idea that it's shorts only. Maybe. I say maybe because maybe your indicator is saying buy the low of the day, buy the low of the day, buy the low of the day, and you're getting stopped. I don't know. You know what I'm saying? I don't know what you're doing. I know what I used to do, and I'm telling you, there's no way I'll ever go back to what I used to do. Anyway, this is the Trader Lab, and I'm not saying this is good or right or anything. I have no opinion on what you do. I do know that most traders who come to Trader Lab are looking to improve their craft. And it doesn't matter if you're a profitable trader or not, and it doesn't matter how long you've been trading. It doesn't matter. In fact, the less time you've been trading, the better it is for you, because now you have less to undo. Because I believed I was doing the right thing because of the random winners. I believed, hear the word, believed. All I had to do was make it better. This is called VPOC migration. What's the language in the supermarket? Too high? I'm not paying that. Too high? You got to be kidding. It's still too high. It's still too high. Too high. New retail price. The can of tuna is worth less. I'm not paying that. Retail price. Too high, too high, too high. The language of the market. Where are we looking to go? Maybe, right? Guys, please give a like if you're visiting in YouTube. Hope you're getting something out of this. Yeah, Joan Rivers. Hope you're getting something from this. Forward this to your trading buddies. If you think this could change everything for you, if you understood it, and you're going to have to change your beliefs. And I'm really a big fan of talking about what we believe. If I believe my indicators and my random winners, that all I have to do is make it better, I'm going to spend my, quote, career as a developing trader with a defective process because I believe it. And the belief comes from random winners and what everybody else does. Now, the thing is, there's over a 90% failure rate for retail traders. That's us. Why? Are they all doing the same thing? Do you believe that you can find a solution that over 90% of traders who do the same thing and fail, that you're going to be the exception? You probably do, because of the random winners. That's what I thought. I said, well, and back when I started doing off-floor trading, all my friends are floor traders. There was not off-floor traders. I mean, they just didn't exist. I didn't know anybody. We didn't have the technology, neither here nor there. So I took a long time to change what I believed because I thought I just had to make it better. That was not the problem. The problem was my process was defective. You can't fix a defective process. You got to change what you believe and then solve for what the market is, not what you want it to be. Isn't that different? And where are we trying to go here? If I get under here, south by southwest. If you were in the Trader Lab and you were only bringing your trade plan, by the way, trade plan means you come to market, you know what you will do. Nothing is made up on the spot. It's all solved. You can't solve for randomness, you see. You have to solve for what you will do, and none of it is made up here. All of it is understood, and you know if this is a vetted trade for you in alignment with the condition of the market, these are shorts if it's in your vetted plan. What does vetted mean? I know if I take 30 or 50 of these things in this condition, I have a probability at least of getting risk neutral there or there. And if I can't get back above here and squeeze out, then this, and all the targets down below. Do you think you can learn this? Do you think if you did that you could maybe create a sustainable career and become a professional trader? And I'm not saying you will be able to, because this is going to require you to change your beliefs, and that's not easy for us. Remember, ancient mariners believed that if you sailed to the horizon, they would fall off the end of the earth. And that was for millennia, okay? Somebody along the way got brave and took the risk to sail to the horizon and figured out they weren't going to fall off the end of the earth. That changed the beliefs, didn't it? But until somebody did that, they stuck with their beliefs. Poor analogy, but what you believe to be true is only based on the things you're familiar with. You've never been in an environment that's 100% random 100% of the time. We have to solve for randomness. We cannot create certainty, but we can create probability. So if we can't have certainty, let's do what the casinos do, who have a proven business model. Let's create a statistical probability and accept randomness. The things we control is our plan and ourselves. The dealers play the game. Casinos control their game. They don't control the cards and how gamblers play. So we don't control tweets, news items, reports, any of that. We control the plan we bring to the market and how we execute the plan. And over time, if we actually have done the work, and that is work, you create remember where our support was. Now we're under here. Let's watch the behavior. Where are we trying to go? Here, and I'm going to leave you with this. And since the top of the stream, what has been the objective? What has been the objective? 64. 64 under yesterday's low, which we're approaching. Here, under there, and south. That's the Trader Lab. You can learn this, not and 35. So what are we trying to do? Get under there, which we're approaching right now. Get under that low. Get over here, and you can watch it. Get under here, and 35. None of these are trade recommendations. This is the Trader Lab. Please give a like if you're visiting in YouTube. Subscribe. Use the link in the bottom of YouTube if you think this is a way you might want to approach the business. If you're interested in the business, Trader Lab is no nonsense. It is not romper room. And again, if you're doing this for entertainment, don't bother. Don't come to Trader Lab. But if you're ready to roll your sleeves up and go, I've had enough of gambling. I want to be here. I want to create a sustainable business. You're going to have to discard what you believe and fight to overcome habits that are destructive and self-defeating. Are you ready for it? Use the link in the bottom of YouTube. There's no cost. You won't be solicited. You don't have to be a Bookmap subscriber, but it might change your outcome if your objective is to actually create a business. Don't forget to give a like, forward the link to your friends. who are traders, this might be the most important step you take to differentiate your outcome from the percentage of traders who are not sustainable. And you all know those statistics. Why allow yourself to go through that if you actually want a different outcome? Learn from your experience. Get a yield from the time, the dollars that you've already invested. I call that trader Groundhog Day if you don't change what you're doing but keep expecting a different outcome. You will wake up in the same place, still having random winning trades, but if you don't have an edge, over time the dollars go across the table to the other side, the house side of the table, and they only play games with an edge. Think about it. And thanks again for visiting Trader Lab. Don't forget the like on the way out. Appreciate you spending some time with me today.